morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, November 21st. All right, guys. So we have our Trump rally for 8 straight trading days up. We have crazy moves in the indices. Let me give you an example. Russell 2000 up 13.5% in 8 trading days. Do you buy the Russell up here at 13%? That's a year's move in just under 2 weeks of trading. Absolutely insane. And if you looked at the moves, and I always say that when you're day trading, it's a little hard because sometimes the moves happen in the pre-market when you gap up, and then they run them a little bit, and then if you want to try to get in during the course of the trading day, usually you get stopped out. Volatility is starting to expand, even though the VIX is at all-time lows, and I should say, or near the all-time lows again, around the 12 handle in the VIX. You have to be careful because every time it gets to that area, and especially an extended move when we have now, overbought, oversold, we all know is not a sell signal or a buy signal, right? But you have to be aware that in 8 trading days, yields have crept up and just exploded. You could see here bonds have crashed really, and then you have the equity markets just expanding to all-time highs again. And really nothing good other than the hopes of what the Trump candidacy, presidential nominee is going to do for the markets and the economy. That is, to me, crazy to jump into anything like that in the markets. Now, when we talk about it here at TMT, high probability trading, we try to show you when is a good time to be involved in the markets and some stuff like that. You have to be careful. Now you're coming into the holiday. We have Thanksgiving here in the United States this week. So to me, I'm looking for that holiday reversal, right? So we had a big move up in equities. So I'm looking for the market to digest its move and to pause and pull back a little bit. Do I mean crash, whatever? No. Not until I think after the holidays are over. I think when yields rise like this does not go unnoticed. If you go back, and what I did was, and our premium subscribers in our video in the trading room, what I did is, I went back for a few years, and every time rates ticked up, and I don't mean just like this, I mean an uptick. This is an uptick that we've had, but a general move up. Following that move up in rates, markets actually within the next 4 to 6 weeks rolled over. A classic example was last year, the beginning of the year, rates have ticked higher in December. Okay, we started to get a weakness at the end of December, the last couple of days of December, and then we had a full market sell-off. I think it was 8 trading days in January of this year. Take a look back, guys, and do your own homework. You can see. I believe that's going to happen again. This is just out of control, one-sided. You go into the AAII investor sentiment. It is extremely bullish, one-sided yet again, and VIX at all-time lows, markets at all-time highs. And volume extremely light on these moves up. I think you have to be very, very careful here. And I keep mentioning volatility is very cheap. Hedging is very cheap. And if you're looking to keep your portfolio on the longs without taking any profits, I think that might be the time to start looking to hedge your portfolio. All right. 10-year, you could see here, classic example. We're at 234. We had that ascending triangle I mentioned. We're at 185. This is a revision back to the mean here. Here's the 20 at 195. I think that we get back into that 195 to 205 area, right up in these little swing highs here. Okay, that's something that I'm going to be looking for. Next is going to be the TLT. We're at resistance here. You could see the rates. Well, we're at support here, big support. I mean, we've literally collapsed in the TLT, back down to these areas of support. Let me blow that up for you guys. So this is something that I'm going to be looking for a revision to the mean trade. Again, only a revision to the mean trade. I had mentioned in the summer that July, I believe it was August, I said that rates have made a generational low. I do believe rates are going to be ticking higher and going higher. Not like the explosive move we had in 8 days for 8 trading days, but I do believe that we're going to get a gradual move up in rates. That means that bonds will go lower. And then also, when you see this TLT, take a look at gold. Gold here, when gold does not like an interest rate rising environment. However, gold does act well in an inflationary environment, right? And of course, what? A safe haven trade. So you got 2 things going for gold. We met our other target of 1200 to 1212. I believe right now, the way I see gold trade, I think you're gonna. This is gonna be the line in the sand, 1180. We lose 1180. Remember, guys, that thin zone I showed you, very very likely, and we can. The way gold does trade, we could flush literally that back down to the January lows here, okay, of 2016. So I wouldn't buy gold just yet. Anything below 1200, I would start nibbling in with a tight stop. GLD, as you can see here, that is it. This is the line in the sand. 115 is the line in the sand, and you can see that thin zone. We can easily come back down to the 106 area, okay? So watch the GLD. GDX, same thing with GDX, holding up a little bit better. That's going to be an area 61.8% retracement. And then again, that thin zone, same thing. We can get right back down to 14.80, $15 here. Let's go into the indexes. Spiders, we had our big bearish rising wedge. We broke down from the wedge, and now we're back above it again. 8-9 trading days straight up. I believe, from what I'm seeing, and the internals are extremely negative right now, that will probably break back down, and then we'll get back to these moving averages around 215. And then we would reevaluate and see what happens. Again, guys, everything is really up in the air. News trumps the charts. And also, Donald Trump gets sworn in, I believe, January 26th. And I think you're going to have a lot of the same shenanigans up until he gets actually sworn in. Here's a 60-minute. We have some negative divergence here while the market continues to move higher. So just be careful. I'm actually looking for a sell signal. I'm looking for markets to break down from Friday's low in all of the indices. Okay, here's the transports. Again, all of this moving up based on Donald Trump freeing up a lot of their rules and regulations that the Democrats did to free up some free trade so that the small business can get back to doing what they do, and that's creating more businesses. And we didn't have that under the Obama administration, so now they're thinking, goods are going to be starting to get shipped, and this is what you have here. Quite bullish, though, no question about it, but you can see that we've tapered off going into making new highs, 52-week highs. Russell 2000, again, guys, look at the big move up the last few days, and then look what happens. Volume decelerating while we're making new all-time highs. And this is something that scares me. I would never, ever look to buy anything up 8 days and up 13.5%. So if you are looking for a buy, I'd be looking for extreme pullbacks in IWM or, again, the Russell 2000. Excuse me. And I do believe that if you're going to look at any sector, guys, going into 2017, small caps are going to be it. And if you want to do a creative basket, go right into the IWM. I like the IWM for a longer-term hold, but not up 13.5%. Okay, wait for that pullback. Last is going to be the Qs. And then as soon as again, I think we had a big move up in the Qs, but you could see Qs is definitely not at all participating like the other indices are. So be careful out there, okay? We have, again, a holiday week, looking for a holiday reversal going into the Thanksgiving holiday, all right? So be careful out there. Use your stops, and we'll see you tomorrow. Take care.